Thomas Kirchner, you're always looking for corporate events at the Quaker Event Arbitrage Fund. So let's talk about a few that the market is watching. We'll start off with Fiat Chrysler. Everyone is looking for Sergio Marchionne to sell this to GM. Stock's up, I think, about 25% so far this year. So talk about whether or not FCAU is going to get sold.
Yeah, I don't know if they're going to get sold. I highly doubt it they will get sold. But I think where the real value creation potential is in Fiat Chrysler is in the spin-offs. And there's, of course, the Ferrari spin-off that could come in sometime soon. But with the market turmoils that we're seeing, maybe it's going to get pushed out into next year. But the point is, once Fiat Chrysler gets spun off, that'll be $4 to $5 billion. Then we're looking at a potential spin-off of Maserati on the back end of that as well. That's another $4 or $5 billion. So they got about half the market cap coming back to you through spin-offs. And the nice thing that you're going to see is that the conglomerate discount that's currently being applied to Fiat Chrysler is going to go away. And then we're just going to have a pure retail car company, cars and components, and that's going to have a full valuation. And you're probably going to look at a value of 15 to 20 billion just for the core company. You add in the 10 billion of the spin-off, 8 to 10 billion of the spin-off, and you can see how versus the current 18 billion market cap, that's going to be a very nice upside that's going to be had in that name.
All right, well, you're also looking at NCR Corp. It's a lot of activists swimming around in this stock. Mercado and Jana pushing for a sale. We're hearing about Steve Schwartzman and Blackstone is also looking at it. So tell me what you think is going to happen with NCR.
Yeah, so NCR, that whole story started about a year ago when Jana took their stake and Mercado shortly after that. So you have two activists pushing for a sale, and there was just no way management could get away with not selling the company. So we've seen an effort earlier in the year to sell. Carlyle at the time were rumored to be the #1 buyer. That didn't happen. The stock came back from the mid-30s down to the mid-20s. We actually owned it, rode it all the way up to the mid-30s, sold at that point because the risk-reward profile just totally changed at that price level. And now we're back in the mid-20s. The sale is still on. The activists are still on. They're still pushing for a sale. As you pointed out, Blackstone may now be a potential buyer. So we think something will happen in the next few months, and we think that's going to be a very attractive upside.
Well, another stock that's popular with the hedge fund set is Micron. The memory chip maker is down around 50% this year. Has a lot of these activists very unhappy. What's going to happen with this one?
Yeah, so there we're a little more skeptical on the event side. We think, in fact, we know that China has a strong interest in buying semiconductor companies, chip companies in particular. And that is one of the strategic goals of the China's economic planning bureaucracy. The problem is that the American planning bureaucracy, in particular the national security apparatus, doesn't like that at all. So we think that while there is a strong interest by Chinese buyers to buy this company, it's not going to happen, and it'll fail in CFIUS, the Committee for Foreign Investment in the United States. It's going to be blocked on regulatory grounds. So we would be very skeptical about this event going through.
All right, and then finally, you're looking at SoftBank, and you're looking at the pieces of SoftBank, the Japanese giant, own a lot of tech and telecom pieces. So talk about a trade which really extracts the value in SoftBank.
Yeah, so in SoftBank, that's of course also a conglomerate. So if it were a US company, we would say they'll go into a breakup. But they're a Japanese company. They'll never break up. Japanese companies don't break up. So what you can do, though, is you can try to extract the value of the core business. And the way to do it is to go long SoftBank, to short out Yahoo Japan, which they own, to short out Sprint, which they own, and to short out Alibaba. And then you're left with the core business. And the implied value, if you do these trades, right now is about 1,300 yen. And that's about a 15–17% conglomerate discount. That's very tight right now. Most of these conglomerate discounts tend to be wider in Japan, so we think that that's going to widen to about twice that level. And so we have not yet put on that trade, but if it tightens a little bit more, we would put on that trade with a view to the discount widening.
All right, well, thanks a lot, Thomas.
Thanks for having me.
And thank you for watching The Street.